Welcome to our channel. Today, we're diving into 5 essential tips for investing in the stock market. Whether you're a beginner who's just starting out or you're a seasoned investor looking to refine your strategy, these tips will help you make informed decisions and grow your investments. Listen, I get it. The stock market can seem like this big, scary, complicated thing, but it doesn't have to be that way. With the right knowledge and approach, anyone can invest and potentially build wealth over time. The key is to start with a solid foundation, and that's what we're here to help you with today. And we're going to break down these 5 essential tips in detail so you can walk away feeling confident and ready to tackle the market. So grab a notebook, get comfortable, and let's dive in. All right, let's kick things off with our first tip. Do your research. And I'm not talking about just skimming a few headlines or listening to your buddy's hot stock tip. I'm talking about real in-depth research. Before you invest a single dollar in any stock, you need to understand what you're getting yourself into. Think of it like buying a house. You wouldn't just walk into the first house you see and buy it on the spot, right? You'd do your homework. You'd look at the neighborhood, the school district, the property taxes. You'd get an inspection to make sure there aren't any hidden problems. Investing in stocks is the same concept. You need to understand the company's business model. What do they do? How do they make money? Who are their competitors? Dig into their financial health, look at their revenue, their profits, their debt. Are they growing or are they shrinking? Next, consider their industry position. Are they a leader in their space or are they playing catch-up? And finally, think about their future growth prospects. Where is the company headed in the next 5, 10, 20 years? Are there any emerging trends that could impact their business? This might seem like a lot of work, but trust me, it's worth it. By taking the time to thoroughly research your potential investments, you'll be able to make more informed decisions and reduce your risk. Okay, let's move on to our second essential tip: diversify your investments. You've probably heard the saying, don't put all your eggs in one basket. Well, that applies to investing too. Think about it like this. Let's say you invest your entire portfolio in a single company. What happens if that company goes bankrupt or experiences a major setback? You could lose everything, but if you diversify your investments across different sectors, industries, and asset classes, you're spreading out your risk. This means that if one area of the market takes a hit, your entire portfolio won't be decimated. You'll still have those other investments to cushion the blow. Now, diversification doesn't just mean buying a bunch of random stocks. You want to be strategic about it. Consider investing in a mix of large cap stocks, small cap stocks, international stocks, bonds, and even real estate. The key is to create a balanced portfolio that aligns with your risk tolerance and your investment goals. And remember, diversification isn't a one-time thing. You need to regularly review and adjust your portfolio as needed to make sure you're still on track. Now let's talk about our third tip: invest for the long term. Look, I get it. It's tempting to try to time the market, to buy low and sell high. But the truth is, it's incredibly difficult to do consistently. Even professional investors struggle with it. The stock market is like a roller coaster. There are going to be ups and downs, twists and turns. And if you're constantly trying to jump in and out, you're going to get whiplash. You're more likely to make emotional decisions that end up hurting your returns in the long run. Instead, focus on the long game. The stock market has historically trended upwards over time. So if you're patient and you stay invested for the long haul, you're more likely to ride out those short-term fluctuations and come out ahead in the end. Think of it like planting a tree. You wouldn't dig it up every few months to see if it's grown, right? You'd give it time to take root, to grow strong, and eventually bear fruit. Investing is the same way. Let's move on to our fourth tip. Set clear financial goals and risk tolerance. Before you even think about investing, you need to know what you're working towards. What are your financial goals? Do you want to retire early, buy a house, save for your kids' college education? Once you have a clear understanding of your goals, you can start to think about your risk tolerance. This refers to how much volatility you're comfortable with in your portfolio. Are you someone who can stomach big swings in the market, or do you prefer a more conservative approach? Your risk tolerance will depend on a number of factors, including your age, your time horizon, and your overall financial situation. If you're young and you have a long time horizon before you need to access your money, you can afford to take on more risk. You have more time to recover from any potential losses. But if you're closer to retirement, you'll likely want to adopt a more conservative approach. You don't have as much time to make up for any losses. All right, let's wrap things up with our fifth and final tip. Regularly monitor and rebalance your portfolio. Now, this doesn't mean you need to be glued to your computer screen, obsessively checking your portfolio every 5 minutes. But it's important to stay informed about your investments and to make sure your portfolio is still aligned with your financial goals and risk tolerance. Think of it like getting regular checkups at the doctor. You don't wait until you're deathly ill to go to the doctor. You go for regular checkups to catch any potential problems early on. The same principle applies to your investment portfolio. Regularly review your investments at least once a year to make sure they're still performing well and that they still align with your overall investment strategy. As your life changes, maybe you get a raise, maybe you have kids, maybe you get closer to retirement, your financial goals and risk tolerance might change too, and that means your investment portfolio needs to adapt as well. Thanks for watching. If you found these tips helpful, make sure to like, subscribe, and hit the notification bell for more investing advice and financial tips. Investing can seem daunting, but it doesn't have to be. By following these 5 essential tips, you can start building a solid foundation for your financial future. Remember, knowledge is power, so keep learning, keep growing, and most importantly, start investing.